Hey guys, welcome back to another video. Today we'll be taking a look at Foot Locker. So as always, I want to start off with their overview. So their PE ratio is currently at a 4.86, which is great as that's an indicator of it being very undervalued. So now looking at their dividend yields, it's currently at 2.84%, which equates to about 30 cents per share, which is a little low, but it's always nice to see a company give back to its investors, even if it's a little bit. Before we look at the income statement, I want to see what the gross margin and return on invested capital is. Right now, the gross margin's at 26%, which is good because the lowest you want this number to be is 20%. Then with the return on invested capital, it's not the best at 6% because you want this to be at or above 7%. Getting into the income statement now, we're going to start off with the revenue. So as of the most recent year, they're bringing in 7.55 billion, which is weird to see as this company has shown nothing but consistent growth throughout the years, including 2020. I don't find this too concerning, and I'm sure it'll jump back up in 2022. Now, looking at their net income, it's definitely not good. So they're down over 300 million from 2017, and there's no consistency at all with this. And the last thing on the income statement is the shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. As you can see, this part is actually looking good. They've been decreasing this every year and are now down 30 million from 5 years ago. Moving into the balance sheet now, we're going to start off by looking at their current assets. So the current asset growth is not looking the best. In 2021, they did have a big jump to 2.84 billion, which I guess is good because now they're technically up over the past 5 years. But overall, in the past 5 years, it's just been going down for the most part. So hopefully we can see more growth with this in the future. Now, looking at the current liabilities, as of 2021, they're at 1.64 billion. So this is really good to see as they have 1.20 billion more current assets than current liabilities right now. The last and one of the most important aspects to look at in any company is the free cash flow. Cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to see be improved on year after year. As you can see, it's looking okay. They have made a big jump in the most recent year, but overall, there's a lot of ups and downs, which I don't really like to see. In conclusion, when it comes to buying the stock, I personally wouldn't unless it's less than $20 someday somehow. There isn't much growth going on, so it's definitely not the most attractive stock I've looked at. Going into the future, I'd hope to see them improve on their net income and free cash flow. And two things I want to mention before I end this video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I'm not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.